My exclusive sit-down with Treasury Secretary Steven Mnuchin. We talked about a wide range of topics, including trade negotiations across the globe. And now fears of a potential recession have certainly moved off of the front page. Policy moves at the Federal Reserve, though, still a focus. We began with President Trump's economic policies and the growth that they've spurred. Great first quarter, 3.2% growth. To what do you attribute such vibrancy?
It was very impressive, and it's a result of the president's economic program. So this was tax cuts, tax reform, regulatory relief, and trade deals. And, not only was it a great number, but the first quarter is normally 1% lower than usual, and the government shutdown probably cost 30 basis points. So this is really like a 4.5% unadjusted quarter.
That was incredible. So how do you keep this going? How much of a runway do all of those policies have in terms of providing a boost in the future?
Well, Maria, as you know, last year there were a lot of people who said we'd never get to 3%. We did. Then there were people who said the economy was going to slow down. I think the president's economic program will continue to show strength throughout this year. And the U.S. is really the bright spot of the world. We see Europe slowing. We see China slowing. We still see tremendous amounts of money coming into the U.S. economy. And I think it looks very clear for the next year.
What about Europe's slowdown? Because a lot of people feel like that has to hit the U.S. at some point. How significant is that slowdown in Europe?
Well, there's no question that the slowdown in Europe and China has already had some impact, but it just goes to show you how strong the U.S. economy is doing. So, again, I think we'd be even stronger if it weren't for that, but I expect that's a modest impact.
Do you think the corporate sector is really showing the strength more so than the consumer? Is the consumer shaky? How would you characterize each sector, consumer versus corporate?
I think as you look at each quarter, we've seen a little bit of a variation, but I think as you look at over the time period, we've seen both the consumer as well as the business sector perform extremely well. We continue to see a lot of investment in the U.S. We see more jobs. We see the participation rate going up. We see wages increasing. So this is really an across-the-board expansion. Wages are increasing better than 3% year over year, and yet the Fed can't even get the inflation that it's targeting of 2%. What's your take on inflation right now? Well, Maria, that's good news for the U.S. economy to have this environment where we have low inflation and good growth. That's really the perfect condition we want to continue the expansion. Is that why Larry Kudlow is asking for a cut in interest rates by 50 basis points? I mean, if things are going so well, why is Kudlow asking for the Fed to lower rates? Maria, you know, in my position as Secretary of the Treasury, I have to respect the Fed independence, so I'm not going to comment on interest rates. Well, how about commenting on Kudlow? I'm not going to comment on Kudlow commenting on interest rates either. All right. Well, the Federal Reserve is obviously right now saying it's out of the way. It's not going to be doing anything. But at some point, with all of this strength in the economy, you would expect rates are going to go up, and yet they're going down. Well, Maria, if you look at, at the end of last year, the market expected rates to go up another 100 basis points. The market's now adjusted those expectations. Matter of fact, at certain points, there's been expectations in the market of a rate cut. I think the Fed has said they're going to be data dependent, and we'll see how the data comes in and how they react. So did it matter that we saw that inversion, the 2-year versus the 10-year yield? Usually an inversion like that indicates a recession is at hand. No, I said at the time I wasn't concerned about the inverted yield curve, and I continue not to have concerns about any of that. I think, first of all, the yield curve just reflects markets. Sometimes markets are efficient and sometimes markets aren't efficient. But I don't think that was ever predicting a recession. I think it was just predicting what people expected future interest rates to be. But, there's a lot of talk about recession the end of last year. There's no talk about recession now with people seeing these numbers. Well, these numbers certainly indicate a much different story.